What's going on, everyone? I hope everyone is having an amazing weekend so far. Happy Sunday. Obviously, tomorrow is a day off in the market. Make sure you guys are resting up. Have an amazing, rejuvenating weekend. Go work out, go for a walk, rest up. And, we're going to get ready for the third week of the trading year starting on Tuesday. So in today's video, we're going to go over the stock market. We're going to go over the SPY, QQQ, IWM, crude oil, the 30-year bond. We're going to talk about GameStop. We're going to talk about the crypto markets. And then, of course, we're going to go over all of the technical analysis you guys wanted me to do for the weekend. And there are a lot of, there's some things that we have to worry about in the markets moving forward. So without further ado, let's get started with this video. All right, so here's the SPY. I alerted we were getting into some swings on all of the indices over the weekend. Technically, we did close over this level of resistance here, as well as the prior day's close. So those were two levels that we basically closed over. So if we were going to go long, it was, small position. Heading into Tuesday, I believe we will be at like 466.50-ish on Tuesday, so these calls should be profitable. But either way, this is not a bullish setup. This is not a bullish scenario on the SPY. This looks clearly like a bear flag, right? We failed multiple times at 473, and this was just a textbook reversal here. And that's why over the past week, I was just very, very hesitant to aggressively go long because this is not a bullish scenario here, right? So yes, technically in the short term, we're oversold on the MACD, but so looking at the MACD from January 10th, right? The MACD is much, much lower. Yet the SPY basically came back and was almost as low. We were essentially $2 away from where this MACD was here. So now the fact that the MACD right here, we're still much, much higher than the prior low on the MACD, means that there is still technically tons of more room to the downside until the SPY even, falls much, much lower. So does that make sense? So essentially right now the MACD is much, much higher, right, than it was down here. But the price of the SPY was $2 above. Does that make sense? So looking at this indicator, what I'm seeing is that there's still tons more room to the downside if we were to begin falling, right? And it's just this is just a really, really bad setup. What we would have wanted to see last week was a clean reversal and then break into new all-time highs. That was basically what we saw every single time. Every single time we had a really, really big bottom in the market, we would fall dramatically and then make new all-time highs. We would fall dramatically, make new all-time highs, fall, new all-time highs. That did not happen this time. We fell very, very dramatically on the 10th. We failed at this level of resistance, and now it looks like we're potentially going to go back, fall much, much lower. So, yeah, this is just not a bullish setup. You can see the RSI is stagnant here, which technically means, there is still more room to the downside. So you have to be careful now. This is not a time to be aggressively going long or really aggressively going short. It's more of a time to just wait and be patient. We had 2 weeks of the market so far where we were just alerting win after win after win after win. It is not always the best time to take swings every single day. All right. So until I see justifiable reasons to go long or short, I'm not going to alert many, many swing plays because they're just not as they're going to be much more riskier going long heading into the new week and the weeks moving forward. So currently, this is a very bearish scenario on the SPY. The SPY needs to obviously break above this 469 level. Then it'll be less scary. But for now, just looking at this chart pattern on face value, this is a very bearish setup on the SPY. And what we would want is a retest of this trend line back here, potentially at around 455, for a healthy pullback that would cause the SPY to fall outside of the lower level of the B band much, much clearer, right? And then that's when we would start to really throw our entire portfolios into longs for maybe a month or two out, and then play the huge bounce to the upside. So that's what I really want to see, right? I was saying last week, regardless of whether or not we bounce or we don't bounce, it's irrelevant, because right now the plays are not safe. So I'm not going to get into plays that are unsafe just for the sake of trying to make some money every day on swings, right? So there's my analysis on the SPY. Let's go ahead and take a look at the garbage IWM.
Oi, Russell! Somebody gonna get hurt real bad.
All right, so there's basically the Russell needs to get its act together. The Russell is really acting it's really acting garbage. That was Russell Peters, and it's a childhood joke that I used to, really love. But the other reason why I went long over the weekend was because technically, yes, we closed above this downtrend level here, right? And we closed above the prior close. The RSI also flat a bit. So it does look, seemingly bullish, right? This was a good opportunity to swing overnight. It was a pretty decently safer opportunity to go longer overnight. The MACD is oversold, and we came and see. This is what I'm saying. So what I was just trying to show on the RSI of the SPY, right? So on January 10th, we were looking at the SPY earlier, how the MACD was much lower, right? And on Friday, the price of the IWM fell below the January 10th price, yet the MACD did not fall below. Okay, so does that make sense? That means that there is still much more room to fall to the downside, just purely looking at this scenario here. So now imagine, literally, the stock was trading lower than it was before, but the MACD is still higher. So that means that if the price of the stock is showing more weakness than the MACD is showing, that means that there is potentially a much bigger move to the downside still left in the tank. That is basically what I'm seeing from this MACD indicator currently. Okay, the RSI is a bit better here because the RSI, it's obviously showing more weakness than we were. But regardless, the MACD is clearly showing weakness right now in the IWM. All right, this is not good. So yes, we might come back, retest levels of resistance, maybe 216, maybe 217, right? If we close above 218, none of this matters. But this is, a pretty bearish scenario. So I hope you guys understand why I'm so concerned about this. And another thing, the IWM is just really garbage. This is potentially a huge bear flag formation here that we can see, right? You can see this right here, huge bear flag. So that is terrifying. So we really need to monitor how the IWM closes soon and what it's going to do next week. Next week, I think, is going to be very important. And once more, it's a time of patience. Do not force your trades. The opportunities in the market are not going anywhere. Your money is. It is not basically the stock market is an infinite game. The more money that you have, and as long as you have money, the more you can play the game. The game of the stock market is not going anywhere. But if you chop up your portfolio and say, for example, if you waited 2 weeks and then the market ends up vomiting below the Bollinger Bands, that would be a much safer buy opportunity. But if you try to catch every single buy, sell, up, down movement in the market and you end up losing 30-40% of your portfolio, you're going to kick yourself when a really safer buy opportunity comes, right? So that's why it's much better to just be patient. The opportunities aren't going anywhere, I promise. So here's my analysis for the IWM. Yes, in the short term, we might pop up just a little bit, but we can clearly see the divergence in the MACD, showing that there is still tons more room to the downside for the MACD. Looks very scary. But, we do have to wait and see what happens. But what I'm about to show you next is basically the reason why I am very bearish on the market and why on Friday I alerted, just be careful. It's a 50-50 toss up. So there's my analysis on the IWM. Now let's go ahead and take a look at the 30-year bonds and the tech stocks. All right, here is what I am really, really worried about. So the 30-year bond, so we can clearly see this MACD. What I was basically saying in the SPY and the IWM earlier, we can see this happening in the MACD right now. So clearly, this is lots of weakness. The 30-year bond failed this level of support after being oversold on the MACD and oversold on the RSI. We barely bounced. We couldn't even come back and reclaim this 157 level. We failed at the 10 simple moving average and completely reversed. And we fell back down 155.14. This is extremely bearish and very, very scary, actually. Obviously I'm not one to push a bearish bias. But this is not a good sign. Only because, number one, you can see, first of all, the lower level of the Bollinger Band is very, very far away from where we currently are. So usually that means there is a lot more downside potential, right? So that's number one. Number two, the RSI is still not yet oversold, which means that there is still more room to the downside, right? Number three, the MACD is still moving upwards and we're still overbought on the MACD. Yet we're breaking below levels of support. So when the MACD is moving upwards and when we're overbought on the MACD, when you're overbought on the MACD, the 30-year bond should be over here or somewhere above levels of resistance. The fact that we're falling below levels of support while the MACD is showing strength is terrifying. That means that there is tons of more room to the downside, and potentially we can come back and fall below these 153 levels and then even come back and retest 150. If these things happen, then the SPY, the NASDAQ, the IWM will be in beautiful buying opportunities. That is when we are going to really, really make that. Is like that's what I'm saying. Just wait and see what happens with the 30-year bond. Just be patient. Right now, the 30-year bond is showing lots of weakness. If I alert any swings overnight, cool. Buy in cheap. Do not buy in with like a bunch of different contracts. If you have less than like a $5,000 account, obviously I'm not your financial advisor. This is not financial advice. Just manage your risk properly. All right. Understand that short term, like not short term, but over the next few weeks, maybe the next month, bullish setups are not going to work out as well. Right. So I'm only going to share things that are high quality. Right now, the 30-year bond is showing scary. It's showing scary weakness. Yeah, we just have to monitor this. So if the 30-year bond comes and breaks down below this prior low here, then the SPY is probably going to easily fall down to 450 or 455. And that's when we're going to start loading up into more calls for longer term. And then obviously once we continue falling lower and lower, we're going to scale in. Make sure to follow me on Twitter. I'm going to walk everyone through exactly what I'm doing, as I have been this entire year. But right now, the 30-year bond is showing so much weakness. This is not a good sign. Yeah, there's not much else to talk about here. So there's that. Now let's go ahead and take a look at the NASDAQ. So the NASDAQ this is also clearly, we broke down below this level of support, fell, and then we fell even lower on Friday. We bounced up just a bit. So I alerted longs technically because we closed above 378.61, which was a level of resistance, right? So we technically closed a bit bullish, so we could have a bit of a pop to 380, 150, 382 potentially on the NASDAQ heading into Tuesday, which will make our calls profitable. But overall, because of the weakness in the 30-year bond, this is just not but this is not a bullish environment. Until the 30-year bond starts to show some sort of strength, that's when we're going to have a bullish environment once more. But right now, it looks like the NASDAQ can easily potentially break down below this 370 level again. And yeah, this is not a good sign. So once more, you can see the divergence in the MACD. The MACD currently all the way up here, right? But the price of the NASDAQ earlier was 375. So we were $5 away from 370, where the MACD was all the way down here before. The price of the NASDAQ, or, you know, the MACD of the NASDAQ is only over here. So now in conjunction, if the NASDAQ falls and breaks below this prior low on the MACD, that can easily send the NASDAQ much, much lower to potentially even 360 to 363, 364. Very, very bearish scenario. Because of the weakness that we see in the 30-year bond. It's very, very terrifying, actually. So yeah, I mean, we're gonna have to monitor what is going on in the market. We're gonna have to see whether or not it's a good opportunity to go short, to scale into shorts. But again, you know, I'm not really safe. I don't really feel comfortable alerting swing shorts until there are clear breaks of resistance or support. So we're just gonna have to monitor that. But right now, guys, like, this is just not a good. I mean, this is just really bad. Like, I can't really explain how bad the 30-year bond falling is for the market. We're just gonna have to wait and see. So, yeah, currently the NASDAQ, it did hold above 380 technically, right? That's congratulations. But until we break back above this uptrend line, which is on Tuesday, it'll be at 386. I don't see how it's justifiable to really, really feel comfortable going long. Even buying contracts for like a month out right now, there's no real because I know a lot of you guys are talking about wanting to buy contracts out like a month out, month and a half out, 2 months out. There's no point of really getting into contracts right now, in my opinion, if the 30-year bond is showing this much weakness and if there's still huge downside potential. I'd rather wait. I'd rather wait until the NASDAQ or the stock market is trading outside of the lower level of the B bands before I really start to scale into any longs for, you know, further out. Because right now, the market is just not showing that much strength. If we do miss a bounce, don't beat yourself up. Don't be like, oh, I knew I should have bought the 1 month out contracts. Now is not a good time. Now is not a good time to even try to think about that right now, because it's showing tons of weakness. I mean, I don't want to keep on repeating myself, but, you know, very quickly, there's my analysis for the overall stock market, and the 30-year bond and everything. So now let's go ahead and take a look at the crypto market. All right, so not to make this too long here, you can see that Bitcoin is clearly failing to break above these levels of resistance here, these resistance lines. Also, it's clearly failing to close and break above 44,000, right? While the MACD is very, very overbought. And the RSI is stagnant. So this is also a very bearish sign right now. Technically, yes, we could go to 44, even 45,000. But the MACD being this overbought right now is not a good sign. That's why I'm continuing to think that we do fall down below 40,000 once more, and that would give a much, much better buying opportunity for the rest of the crypto market. You know, these levels are just holding very, very perfectly. Let's go ahead and take a look at Ethereum. Ethereum broke above the downtrend, but it's extremely overbought on the MACD now, which is not a good sign. What we would have liked to see is the MACD on Ethereum potentially being oversold and breaking out of this level of resistance. But it's the MACD on Ethereum right now is basically the equivalent of a stock that has been like parabolic. Okay, like stocks do not become this overbought on the MACD unless they are parabolic. So the fact that we just broke above this level of resistance while being this overbought on the MACD is very, very bearish. So obviously the next level of resistance, the key level of resistance that needs to break on Ethereum is this 3,500 level. Until that can break, we're still, you know, I still do think we're going to break down below 3,000 on Ethereum. So there's my analysis on the crypto market. Now let's go ahead and take a look at, you know, GameStop and then the rest of the stocks you guys want me to do technical analysis on. So before I continue doing any of the other stocks for technical analysis, I want to go over why I think GameStop is going to have a huge few weeks. All right. So as you know, I alerted swings on GameStop on Friday, right? And I want to show you guys something. So since GameStop has had, you know, the big monster move last year, right, to 518 in the pre-market, the RSI and the MACD, as well as the Bollinger Bands, have been oversold collectively in the past year only 2 times before Friday. Okay, so the first time it happened was on August 4th. 21 days later, the price of GameStop shot up 55%. All right. The second time was on December 13th. You can see here, yes, we were trading outside of the Bollinger Bands. We were oversold on the RSI and we were oversold on the MACD. Within 8 days, the price of GameStop shot up 17%. So at the moment, GameStop is in a very, very beautiful falling wedge pattern. Falling wedge patterns are one of my favorite bullish patterns. That's number one. All right. So intraday on GameStop, we didn't close below 30. So if you look at the RSI number right here, on Friday, we didn't close below 30. But intraday, when I alerted those swings, the RSI was 29. So that's when we started to buy in. So essentially, we were oversold on the RSI, we're oversold on the MACD, and we're falling outside of the lower level of the B band. So that's the third time that it basically happened. So now essentially what I really, really want to happen is on Tuesday, I want the RSI to close below 30. And for that to happen, I want us to potentially break down below 104, maybe even $100. And then I'm going to buy even heavier. And here's why. So DWAC. DWAC is President Trump's, the social media company that he wanted to make. Okay. And on the eve of the Capitol riots, DWAC shot up almost 20%. Just for the fact that it was the 1-year anniversary of what happened when people literally, ran into our Capitol building and protested and stuff, the stock shot up 20%. Since this has happened, DWAC is up almost 40%. So if DWAC shot up basically 40% because of the 1-year anniversary, what do you think is going to happen with GameStop? Yes, it's a meme stock. I understand that. But GameStop's community is much, much stronger than DWAC's, I believe, right? GameStop as a company has no debt. And the setup is just really, really beautiful, making it seem like it's a very, very bearish stock, right? It's the perfect time for buys, right? And the 1-year anniversary for GameStop hitting its all-time high in the pre-market is on January 27th. So we bought into February 11th calls. Yeah, but I think we bought into February 11th calls or February 18th calls. I don't remember. But if we pop up into January 27th, this is going to be a very, very monster move, in my opinion. And even if GameStop were to go up even 20%, the price of GameStop is going to be up almost $30 in, the next 2 weeks. So this is a really, really, bullish situation, I think, because of all of these different indicators switching into a really, really good buy signal. The fact that we're at this beautiful level of support for the falling wedge pattern. The fact that DWAC had a huge move heading into the Capitol riots, a 1-year anniversary for the Capitol riots. And the fact that GameStop's 1-year anniversary is literally around the corner. Oh, sorry. I needed to also show one more thing. So here's the SPX. And let's go ahead and share. All right. So the end of the year, the end of January is when GameStop started to really, really skyrocket. Okay. And now let's take a look at the chart of the SPX. So this is the end of January last year, right? The SPX had a very, very bearish drawdown. It fell from 386 to essentially 370, right? So what I'm seeing is, yes, there's weakness in the 30-year bond. There's weakness in the overall stock market. There's potential strength in GameStop. And it looks like, this is exactly what happened. So as the market was falling, GameStop was skyrocketing. So I was sharing that I think that the market is overall bearish, right? Because of the weakness in the 30-year bond. So with all of those things put together, I think GameStop is going to have a really, really amazing next few weeks. And as crazy as it might sound, I have not, it's going to sound so crazy, but I have not had so much conviction in a trade in a very, very long time. It's kind of scary. Literally in like the past 10 years, I haven't felt this comfortable even talking about it. Like, I'm telling all of my friends, I sound like an ape, but it is what it is. Like, the SPX looks weak. The 30-year bond looks weak. DWAC had a huge 1-year anniversary sentiment pop off. And yeah, man, GameStop looks bullish in terms of the technical indicators. Good buying opportunity. So there's my analysis for GameStop. It looks like we're going to have potentially 500 to 1,000% gains on our contracts. Hopefully, if we fall down below this lower level of the wedge and we fall down even more outside of the lower level of the B band, I'm going to buy at the money contracts for February 18th, most likely, and really, really capture the movement on GameStop. So there's my analysis on GameStop. All right, number one, let's go ahead and just start off with Sol. So currently, the MACD is not favorable, right? Very similar. This looks exactly the same as the analysis on Bitcoin, right? It looks like we can potentially fall much lower, right? And, you know, we can fall back down below 130 potentially on Sol. Even come back and retest this 120 level. But all in all, the main thing that we have to know is that if you were to buy Sol right now, the all-time highs, Sol is approximately 75% away. So if Bitcoin were to come and, you know, retest 70K, Sol would be much, much higher than this, most likely, right? We're looking at like 100% at least percentual gain if Bitcoin makes new all-time highs on Sol. So overall, Sol is a very, very safer. I mean, it's not a safe, but it's so much better than Ethereum. It's much, much cheaper in terms of gas fees, and it's multiple times faster. So overall, Sol, I think, can potentially even retake or overtake Ethereum. And Sol's market cap, you know, it's just I think it's 40 billion, and Ethereum's market cap is like 400 billion. So there's a lot of upside potential for Sol left. So Sol is like really, really good long term in my opinion. All right, Tesla. So the reason why I alerted getting into Tesla Lotto calls over the weekend was because we closed above this trend line that was basically very, very important. It obviously acted as resistance and support multiple times all throughout here, right? And we closed above it. So I'm just going to take that on face value and alert a Lotto call. So technically, this is a bullish. This is a bullish scenario. This is a bullish setup. We closed above resistance. Now, what I really want to see is Tesla close above this 10 simple moving average and then close above 1100. Once that happens, then the fireworks can really start with Tesla. And that's when the fun can really begin. But right now, overall, this is a good little buying opportunity for a Lotto. What I want to see is Tesla really, really skyrocket in the next week. So hopefully our Lotto will be profitable. But overall, this is a pretty bullish situation for Tesla. But 1080 is going to be really, really big support. Really, really big resistance. All right, so here's a chart of NVIDIA. We can clearly see we failed to break above this 271.18 level of resistance, which is not a good sign. The last time we closed above this level of resistance, we rallied up for a few days. So that level really needs to break to the upside. Yes, the MACD is oversold. The RSI is showing some sort of sensitivity with this move, which is not the most bullish scenario either. We would have rather see the RSI flat. That would have been a much more bullish in this situation. We do not really want to see the RSI moving upwards on a very baby bounce here. All right, so yes, the MACD is basically showing what we would have wanted to see out of the RSI, but yeah, so very, very key level of resistance that needs to break and we need to hold above is 271.18. Once that can happen, then NVIDIA can potentially come back and retest 300. But of course, that also really all just depends on the overall stock market of what happens, right? But again, you know, NVIDIA has the support of Nancy Pelosi. So Overall, it should be a good stock. All right, so here's a chart of Square. So Square is basically showing exactly what I was afraid of in the overall, indices market. So right now we can see that the MACD on Square is much higher than it was a few days ago on January 10th or even January 7th, right? But the price of Square is lower. So if the MACD is higher, but the price of Square is lower, that is very, 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 very bearish. So it's another very, very bearish sign that this Bollinger Band here, the lower level, is basically just in free fall. So there's no real way of even becoming algorithmically oversold on Square's Bollinger Band, because the price of the lower level of the Bollinger Band is just falling so sharply. So it really looks like potentially we can break 130, and the next major level of support on Square is going to be at around 120. By that point, we'll have vomited much lower, similar to what happened here, and then we can have like a big bounce to the upside of what happened back here. But this is not a bullish scenario for Square. You can see that clearly in the divergence here on the MACD. This is not a good sign. So I would just really, really be careful. It's not worth trying to catch a falling knife on Square just yet. I would wait for at least a break of like 128 before I start looking at the chart again, to be honest. So here is Boeing. We can see that it closed above its 200 simple moving average, and a level that is very, very important to the upside now is 230. That's basically the next level of resistance. The RSI is not yet even overbought yet. Yes, the MACD is a bit overbought, but it's a good sign that the yellow line here is also upwards, right? So it's not going to get as overbought as it would if the MACD was flat, if the yellow line was flat. So it's a good sign that the yellow line is moving upwards. It's a good sign that this price is moving upwards. We're breaking above major levels of resistance on Boeing, and the RSI still has more upside room potential. So the next key level is going to be 230. 230 is a potential level that I think we can come back and retest this week. So definitely keep an eye on that. So here's ADA. Obviously, it's showing lots of strength. We closed, it looks like we're about to close above the 50 simple moving average. We held this 20 exponential moving average as support very, very well. But now the MACD is extremely overbought here. You can see the RSI is moving up very sharply as well. And we're only about 5 cents away from the upper level of the B band here. So that is a bit more worrisome because it means that there's not as much upside potential. And it's very unlikely that ADA is going to start really, really squeezing, in my opinion. I could be wrong, but judging from the weakness of Bitcoin, I don't see how that, I'm not sure if that's going to play out very well, but technically it looks like we're going to close above the 50 simple moving average. So a very, very key level of resistance essentially now is it's going to be 150. So if 150 can break on ADA, then the next upward target is potentially going to be this 200 simple moving average at basically around 170. So overall, ADA does look very, very bullish. It looks like it's breaking out above from a bull flag formation. So we need to see if it can break above 145 and then 160 and then 170. So overall, ADA does look bullish, but it's going to key off of the levels of Bitcoin and the strength of Bitcoin. Adobe does not look very bullish. Yes, we bounced. We're making higher lows here, but the MACD is still overbought and the RSI still is not yet oversold. So we can potentially see much more downside on Adobe. A key level of resistance on Adobe is going to be around 528. 528 needs to, break. And then the level of resistance above that is going to be 541. So overall, Adobe does not look very bullish either. So I'd be careful about Adobe. Starbucks does not look bullish. So number one, we can see that the MACD is starting to curl up, yet the price of Starbucks is falling downwards. So we should not be seeing this. What we would rather see is the MACD continue to fall lower as the price of Starbucks is also falling lower. All right. So that is number one. That's a very bearish sign. Yes, in the short term, we could bounce back up. A key level of resistance is going to be this low right here at around 104. So we could bounce back up to this level, but overall, this is very, very bearish. The fact that the MACD is showing strength here when the price of Starbucks is not showing strength at all, right? Number two, the RSI, yes, it's oversold. So that's another reason why we could potentially see a bounce, but it's not as weak as it should be. So there's still so much downside potential, in my opinion, on Starbucks. The next key levels of support are going to be 97.65 and then 95.92. So I would wait till we get closer to those levels of support before looking to buy on Starbucks, or you could go short as these levels break. So there's my analysis on Starbucks. Roku does also not look bullish. The Bollinger Bands you can see are in free fall, which means that there's still tons more room to the downside in terms of it becoming oversold on the Bollinger Band. So that is not a good sign. Number two, the RSI just slightly became oversold here when we've had clear, huge downside recently. So that means that there's still tons more room to the downside on Roku. And we just closed below 170.44, which was a very, very key important level of support. The next level of support is most likely going to be around 150. So that, yeah, I mean, to go long on Roku, we would need to close back up above 170. So also the fact that the MACD is moving upwards, yet the price of Roku is clearly falling, that's also not a bullish sign. So I would really wait. This is not a good sign. This is not a good setup here for Roku just yet. All right, Apple. Clearly Apple, bounced back. We can see that it's, looks somewhat bullish here. That's why I also alerted swings in the NASDAQ. But again, key level of support is going to be this 168 level. Key level of resistance is going to be 175 to 176. So until we can really close above 176, that would be a much safer opportunity to go long. Or if we break down below 168, that would be a good potential shorting opportunity. But right now, Apple is it's in no man's land. It's kind of like in a 50-50 area. So we went long over the weekend. So if Apple does well, that means our calls are going to do well. But I'm not entirely, convinced or like very, very, I don't have that much conviction about going long in the market currently. So there's my analysis on Apple. So MU is very, very strong. So we can clearly see that it's almost breaking into a new high. The MACD is still oversold, and the RSI still has not even become overbought yet. So that shows that there is still tons more room to the upside. It looks like MU can easily break above $100 soon. We can see that this MACD was very, very overbought here. But what did the price of MU do? It just consolidated here. It consolidated so much that the MACD became oversold, and this is such a bullish consolidation because once the MACD of MU became oversold like this, it basically showed us that there's still tons more room to the upside, and that's exactly what's going on. So MU, in my opinion, does come back, and it breaks above $100 potentially. So MU looks really, really strong. So very similar to MU, Ford also looks very, very strong. The price of Ford is continuing on higher, yet the MACD is falling. That is the type of divergence we want to see. That is very, very bullish. This is basically a bull flag, and we broke above the bull flag, and it looks like Ford can potentially make new highs as well. But one thing that is a bit worrisome is that we are overbought on the RSI. So that is something to take into consideration now. So Ford can potentially come back and retest 24, and then even come back and potentially retest 23. But overall, this is still a very, very bullish setup for Ford, and potentially in the next few weeks, it can continue on higher. So just be careful for Ford. Of course, it's going to depend on the rest of the market as well. So there's my analysis on Ford. Airbnb kind of not really doing much. You can see that it's clearly in a zone here between 159 to 170. So I would be more comfortable going long above 170.78, which is a fib level here. But overall, Airbnb is just really just trading in a zone. You can see that there's no real positive risk reward of going long or short currently. The only thing is that the indicators, the MACD looks bearish and the RSI also looks bearish. And we also failed to close above the 20 exponential moving average and the 10 simple moving average. So, just be careful about Airbnb. You could go short as it breaks down below this level at 159. So, there's my analysis on Airbnb. So I was showing how the 10-year or the 30-year bond was looking very bearish. So obviously this is the 20-year treasury short. So the short looks very bullish. So it's basically the inverse. And you can see that the MACD looks very, very bullish. We're making basically new high. We're about to break above levels of resistance here, while the MACD is flat and the price of TTT is green. So this is a very bullish setup. It means that we could potentially break back above 35.50. So this looks very, very bullish on TTT. And of course, it looks very, very bearish for the 30-year bonds. So CFVI. It looks like we're in an uptrend. Obviously, we had a huge pop earlier, but now we consolidated. And basically, we're in a zone again. 1253 needs to break as resistance. I wouldn't even look to buy until we can break up above that. Right now, the MACD is overbought. Yet we're failing to break above levels of resistance here. The RSI is a bit stagnant as well. So I would just wait until 1253 can break. And then, of course, 1310 is going to be the next level of resistance to the upside. So, yeah, I would just wait and be, patient. This doesn't look like an amazing opportunity to buy just yet. So I would just be patient on CFBI. So Reliance looks very, very bullish. We can see that the MACD is oversold. And the RSI has still not become overbought yet, which means that there's still more room to the upside. It looks like it can make, it can touch $10 again soon. The MACD is definitely showing that there is that potential to the upside. So I would be, it looks very bullish. So the level that would need to hold in the short term is obviously going to be this high here at around 820. So if 820 can hold, this potential momentum to the upside can continue, and it looks overall really bullish on Reliance, in my opinion. Snow does not look bullish. We failed to close above the 200 simple moving average. The RSI still has not become oversold yet, even though we had huge downside days right here. And the MACD is moving upwards, yet the price of Snow is moving downwards. So that is very, very bearish. It means that there's still tons more room to the downside for Snow. And potentially we can even break down below this low here at 273. So 273 is going to be the next level of support if, these lows break at 286. But yeah, this is not bullish on Snow. It doesn't look bullish. We want to see a close above the low of this, the close of this candle at approximately 292. So until 292 can close above, that's when you can start to maybe try to catch a bounce. But this 200 simple moving average acted as resistance. The RSI looks bearish and the MACD looks bearish. So I'd be careful on Snow. Coca-Cola, man. Warren Buffett. So the MACD is bullish. We're making new highs and breaking above levels of resistance on Coca-Cola. The MACD is still not even crossed up above yet. And the RSIs continue to go up. So the RSI currently is the only bearish thing right now where we're overbought. The MACD still has yet to cross above. So that is still very, very bullish. We're still not even close to the upper level of the B band either. So Coca-Cola can potentially even see 62 in the next week. So overall it looks very, very bullish. This low here at 61.15 needs to hold as support for this upward momentum to continue. So this still looks very, very bullish on Coca-Cola overall. Lucid closed pretty bullishly as well. It held this 41 support perfectly. And then it also closed above the 10 simple moving average and the prior close of yesterday, while the MACD is falling. So this is good divergence here. So while the MACD is falling, the price of Lucid is going up. So that is a very bullish sign. So the next level of resistance is going to be around 43.50. If 43.50 can break on Lucid, then we can potentially see $45. But then it becomes a bit more worrisome because we're going to be outside of the upper level of the B band. And we saw what happened a few days ago when Lucid was outside of this upper level of the B band. We reverted back very quickly. So overall, yes, this is a bullish sign that there is this divergence in the price and the MACD. But essentially, really, as long as 41 can hold, we're still in a bullish, we're still holding bullish. So this is like the line in the sand for bulls and bears, the $41 mark. So Netflix, we barely, this does potentially look like a bottom on Netflix. We closed above the prior day's close. The MACD is really moving up way too much, which is very, very bearish. And the RSI bounced way too heavily as well, which is pretty bearish as well. So it doesn't look entirely good on Netflix. This move to the upside should not have caused this huge move in the MACD. We're basically giving up a lot of steam to the upside for a small pop. And overall, yes, we could retest levels of resistance at around 545, but then the MACD would just become overbought, and that would be very, very bearish in my opinion for Netflix, and then we would fall down lower. So just be careful on that. So DraftKings, we can see that it's trading at this lower trend line here. We closed above it. So on Tuesday, this level is going to approximately be 2280, 2275. So 2275 needs to hold as support, and we need to close above 2275 on Tuesday. If we break down below 2275, that can be a potentially good shorting opportunity, but this hopefully can be a bottom because we can see that we're trading outside of the lower level of the B band, and we're oversold on the MACD, and we're at this major level of support here. So this could potentially be a bottom, but just be aware that 2275 is going to be a very important level of support. The only thing that I think might end up happening, and the only reason why I think we could break down below this level, is the RSI is still not oversold, and even though we had multiple huge red days. So that is the only worrisome thing that I see here on DraftKings. But overall, we're at support. The MACD is oversold, and we're outside of the lower level of the B band. So 2275 is going to be very important support for Tuesday. Roblox is in a interesting position. It kind of closed below a major level of support here at 7902. Actually, we closed right at it, but I mean, we broke down below it, and it's kind of in sort of like no man's land. The RSI is stagnant. The MACD is oversold. So really what we need to see is a break above Friday's high, which would be approximately $82. We need to see a close above $82 for a potential reversal on Roblox, and then we can potentially see, so from $82, if we close above it, we can potentially see 87. But if this low breaks from Friday, which is 77.42, we can go and retest the 77 level, and then retest these two important levels of support at 71.82 and 67.30. So it's kind of also just in no man's land. So right now we just have to kind of wait to see what really happens, and those are the levels. So Mara does not look very bullish. We can see that it's overbought on the MACD, and it really just needs to break above these two levels of resistance, 29.57 and 32.45. But the fact that we were very oversold on the MACD back in January 10th and January 7th, and we bounced off, and now we're overbought on the MACD, shows me that there's still tons more room to the downside on Mara. We can potentially even break down below $25 in the coming days. If Bitcoin starts showing weakness and the SPY starts showing huge weakness, Mara can break down below 25, even come back and retest $23, because this MACD is very, very bearish as well. And then it would give more time for the RSI to become oversold as well. And yeah, this does not look bullish until we can break above these two levels of resistance on Mara. So Decentraland, it looks, again, it's just sort of in no man's land. The MACD is very, very overbought. We're failing to break above this 20 exponential moving average. And essentially, I mean, if you're bullish long term, if you want to hold for a potential retest of, all-time highs, we're about 100% away. So, I mean, if Bitcoin were to go and retest all-time highs, you would make 100% gain on mana. So overall, you know, it looks pretty bullish. But in the short term, it looks very, very bearish because this MACD and this RSI is moving up stagnantly. So it's giving mixed signals. Essentially, what we really need to see is a close above today's wick high, which is 320. If we can close above 320 in the short term, we can fly back up to 350. So overall, you know, these NFT projects and not NFT projects, you know, the metaverse projects, they look very, very bullish in the long term, obviously. But right now, I don't think that we'll, you know, fly back up to $4 anytime soon, unless Bitcoin can break above 45,000. So SHIB doesn't look very bullish. This is a bull flag formation, but we're failing at the 20 exponential moving average. So that level needs to break first, which is around 3 cents, right? And but the only problem is the MACD is very, very overbought. The RSI is stagnant here, which is fine, but this is a level of resistance here. If we can break above that level, then we can come back, retest this 50 simple moving average. But overall, again, if Bitcoin does not break above 45,000, this is going to come back and fall because of this weird weakness that we see right here in this MACD. So I would be careful about buying SHIB right now. I would wait for another dip. You know, potentially, you know, yes, we could go back to all-time highs. That would give a potential, how much percent return? At least like a 175% return if Bitcoin were to retest all-time highs. So, you know, overall, long-term, it's a decent risk-reward opportunity, but in the short term, it doesn't look very bullish. SHOP doesn't look very bullish because the Bollinger Band, it shows that there's still huge downside potential. We can see that the Bollinger Band is just vomiting to the downside, which is not a good sign. Yes, the MACD is moving upwards here, but again, very similar to what I was showing with the other stocks here. The MACD being oversold like this, but now the price being below, yet the MACD being higher, it's very, very bearish, guys. So I would just be very, very careful. We need to see it close above 1133 before we become like much more bullish on SHOP. So 1133, and then the next level of resistance is going to be this high here at 1191. So that could be a nice move. But again, this is not a very bullish setup here. Those levels, once we hit them, they could just be great shorting opportunities and then fall back down even lower. So I would be very careful about SHOP as well. So JP Morgan, obviously, and JP Morgan, Citibank, they had huge red days. We closed below all of the moving averages. We closed below the 200 simple moving average. So, you know, the next level of support is obviously going to be the 157 level, and then this 155 level. So I would be very careful. This lower level of the B band is still very, very far away here at 151. So again, right now we're sort of just stuck in the middle of the highs and the lows here. So, I mean, it looks like there's still downside potential left. Earnings were bad. So we could continue going down even lower on JP Morgan. So I would just wait and be patient. I would wait for a bottom to form. We would need another few candles to see and gauge where the support is being made. So we caught Visa calls a few days ago. Those ended up doing really, really well. But then we, you know, sold, and now we're basically holding this level of support back here at 214. So 214 needs to hold. If 214 doesn't hold, we can come back down and retest 211 on Visa. We failed to break above the 20 exponential moving average and the 10 simple moving average recently on Friday. But the MACD is still moving upwards. So that is sort of bearish in the short term. So I would be very careful. But as long as 214 holds, things should be good for Visa. But overall, this just doesn't look... I would rather wait for a break above 218.30 and then a close above that level for me to go long again on Visa. So Microsoft was another reason why I decided to signal longs on the NASDAQ, is because we closed above 305.65, which is a very important level of support. But again, you know, this doesn't look very, very bullish overall because we failed to break above this key level of resistance here at 309. Oh, sorry, like it wasn't a defining close above this level of resistance here at like 309.89 and 310, right? We barely closed above at like 310.20. What I would have wanted to see is a much stronger close. So overall, the real reason why I alerted it was because we closed above 305.65. That was good enough for me. And the next upside resistance is going, like the important level of resistance is this 318 level. So if you didn't get long here, you could wait until we break above 318, and then that would be a much better opportunity to go long. That would really confirm the upside potential. But I don't think that that is going to happen because of the weakness that we see in the 30-year bond currently. So yeah, just be careful on Microsoft as well. So AMC, the RSI, yes, it's oversold. Basically, everything that I shared about GameStop is going to apply to AMC. So go to the beginning of this video where I start talking about the technical analysis and talk about just watch what I said basically about AMC, and literally almost everything is going to apply except the January pop. We popped recently much higher in June on AMC, but basically it's very similar. If GameStop is going to pop at the end of January, AMC is also going to pop as well. So that's really it. Just go ahead and look at the analysis that I did on GameStop. Pins does not look very bullish. We can see that the MACD is moving upwards here, yet the price of pins is not really breaking any levels of resistance. So that is very, very bearish. When the MACD is overbought like this, we want to see the stock breaking levels of resistance. But the fact that that has not happened and we're still below levels of resistance is not a bullish sign. It looks like pins can break it down below 31.50 and potentially $31 soon. Crow doesn't really look very bullish either. We can see that this is clearly a bear flag formation, right? You can see that this is a bear flag. We're not even breaking above this level of resistance here at 49 cents, right? Yet the MACD broke above and it's now overbought. So that is not a bullish sign here. It's really not a good sign. It looks like Crow can break down below its 45-cent level and then, continue going even lower. So this is not a good sign, in my opinion, for Crow at all. Neo is also sort of in no man's land. It's right in the middle of support and resistance. Now is really not a good time to really go long, right? Unless on Friday you bought into some calls because we closed above the 20 exponential moving average and the 10 simple moving average. But if you're not in any plays yet for Neo, I would wait for a break above this resistance at 33.28 for us to, start going long. Or if we break below this 28 level, that's when you would go short. So right now, Neo is basically just in no man's land. It's sitting in the middle. So Facebook looks really bullish as well. What I want to see is a break above this fib level at around 337 first before going long. It also coincides with the 200 simple moving average. So I would wait for that level to break before going long right now. You can see that the MACD is, kind of weird looking right now. It's oversold. It hasn't crossed above yet, but this is still clearly a bear flag on Facebook. We need to see a break above 337 to see if the bear flag is, invalidated. So overall, we're still, we're in the middle, not really doing much. We need to see a definitive close above 337 or close below 326 to buy puts. So overall, just, Facebook is not really showing much right now. So AVAX, yes, like the next key levels of resistance are going to be around 97 and then $100. So those are going to be the main levels of resistance. And once again, if Bitcoin does not start shooting upwards, I don't think those levels of resistance start breaking upwards, only because the MACD is very overbought here. The RSI is showing way too much strength, even though, this is potentially still a bear flag formation. So again, if you want to hold for long term, that's fine. But in the short term, it doesn't really look very favorable for AVAX. So, I don't really... We're still in an uptrend here, but it doesn't look that great. So I would just be careful for AVAX. Gala definitely does not look very bullish at all. It looks like we're closing below the 10 simple moving average. You know, yeah, it just doesn't look bullish at all. The MACD is overbought. The RSI is overbought. Yeah, I mean, basically all of the cryptos that have their MACDs extremely overbought like this, but are failing to cross above any levels of resistance, it's not a bullish sign for any of them. So, which is why I think, you know, Gala can potentially break down below 30 cents again. So I would be careful about Gala. But of course, if you want to hold for longer term, it's a good risk reward for the prior all-time highs. So it doesn't really matter too much if you're holding for longer term, but in the short term, it doesn't look bullish at all to me. Tron, what a letdown. What a letdown of crypto overall. It needs to break above 7.1 cents, which is the 20 exponential moving average. Yes, we broke above the 10 simple moving average and are starting to move upwards, but the MACD is extremely overbought now. The RSI is way too strong here for no reason. We haven't really broke above any major levels of resistance. So 7.1 is going to be the next key level of resistance for Tron. But again, it doesn't look very bullish to me at all. It looks like we can potentially break down below 6.5 cents and then potentially even break down below 6 cents in the coming weeks. TLM, very similar. It is not, you know, this 20 simple moving average acted as resistance yesterday. So it, you know, it doesn't look very bullish right now because the MACD is overbought. The RSI is starting to show some weakness, which is a good sign. This is what we want to see from red days. We want to see the RSI moving downwards here. But overall, you know, this 17.25 level needs to hold as support. If that level doesn't hold, then we can break down below 17 cents and then quickly even fall back down to 16 cents-ish. So all of these, you know, coins don't really look too great in the short term. So ESCC has a ton of short interest. Obviously, there's a lot of hype around it right now. But what we need to see is a close above 1660. So if it closes above 1660, or if it breaks above that level, that would be a bit of a safer opportunity to go long and then ride the wave up. But of course, if you're just playing the fact that there's a lot of short interest, you know, GameStop has tons of short interest as well. Also, you know, the flow on ESCC, but you know, 1660 is a major level of resistance first. So if you don't have a position on ESCC first, I would wait. And also, clearly, we're in a huge uptrend, right? So it would be much better to wait for 1660 to break, to enter. An even safer opportunity would be a break above 1685. So those are two levels of resistance that if we break above those, it would be much safer to go into longs on ESCC. And then we could potentially see 20 and then 20 something dollars in the future. But the MACD is overbought and the RSI still showing that there's still more room to the upside. So the indicators are showing mixed signals, but we're in an uptrend and there's tons of short interest and, you know, there's tons of flow in favor of ESCC. So HD had a huge red day on Friday. And the fact that the MACD was starting to curl upwards and it, you know, this is not really a bullish sign. So the MACD did not really fall as much as it should have in comparison to how much it moved up from this little small move upwards. So what that's telling me is that HD can still potentially fall back down to 364. And that would give a much better buying opportunity. I'm definitely going to be looking at this on Tuesday to see if we can buy the dip on HD. So ideally, what I want to see is for HD to break down below 370. And that's when we'll start to look to buy the dip on HD. See, back here, when we were trading outside of the lower level of the B-band, we had one huge red day, right? But then we had an even bigger red day the next day. We fell even lower, right? So we closed over here at 387. The next day we ended up falling down to 380, and then we bounced. So that's what I'm looking to see if it happens on Tuesday. I want it to fall down to at least like 368, 367, and then hopefully we'll buy the dip, and then we can move, you know, capture the upside potential. Also, it's a good sign that the RSI is almost oversold, but the fact that it's still not oversold yet means that there's still downside potential here on HD. So there is my analysis on all of the stocks. There's my analysis for the coming weeks in the stock market. I hope you guys enjoyed. If you guys watched until the very end, I'm very, very thankful, and I hope you guys enjoyed this video. I'll see you guys on Tuesday, and we will continue winning the market. All right, so I hope you guys have an amazing long weekend. Have an amazing day. Have an amazing Monday, and I will see you guys soon. Have a good one.